Good morning, everybody. Thank you for joining me for the aftermath of Liberation Day. So today's topic is one of the wildest markets that I've seen in a while. President Trump just dropped tariffs on 185 countries at the same time. Yes, you heard that right, 185 countries. This move could shape global trade, the U.S. economy, and your investment portfolio in a big way. Let me walk you through what happened, what it means, and what to expect going forward. Let's get into it. So I'm recording this the morning after, and this is what the market looks like. It is a sea of red, you guys. Here's a live chart. So the market ended at 4 o'clock right here at about 565, and this is the S&P 500. Look at what it's doing in after hours in the gray line down here. It's getting absolutely decimated. Hopefully things change by the time this video comes out. So let's get back to the facts. So earlier today, the Wall Street Journal reported that the United States would impose a 10% tariff on all countries, every single country. So markets shrugged it off. Futures actually moved up 2% if you guys were following the market yesterday, but that did not last long. At 4:26 p.m. Eastern time, President Trump took the stage and picked up a poster. Yes, a literal poster, which we can see right here. And he started listing these tariff countries name by name. Check this clip out.
So if you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart.
And by 4:42 p.m., just 16 minutes later, the S&P 500 futures had completely reversed, down 4% from their highs. That's a $2 trillion market cap swing in under 15 minutes. So you can see the Wall Street Journal report. The time is on the bottom. So this is military time. 16 means 4 o'clock. For you uncultured Americans, it's military time. I'm just kidding. So right here is 4 o'clock. Wall Street Journal reports 10% baseline tariff. Full list of tariffs is shown in addition to the 10% baseline, and look at where we're at by 6 o'clock right here. So insanity. So how do these tariffs work? You're probably wondering. So Trump explained that this isn't just a flat 10% tariff. Instead, he introduced something called reciprocal tariffs. So if we take a look at this chart, this is just one screenshot. Remember, there's 185 countries. These are just the ones I want to show you how it works. So on the left column, you can see the tariffs charged to the United States. I know it's kind of hard to see. I'll try and zoom in. Again, if you're not watching this on a TV, turn your device to the landscape mode, make the screen as big as possible. And then you can see in yellow, the USA discounted reciprocal tariffs on that country, okay? So here's how they work. If a country imposes a 20% tariff on U.S. goods, we'll respond with half a 10% tariff on their goods. So this sounds fair, right? So that's until you realize some countries already have sky-high tariffs in place. So China reportedly charges the U.S. 67%, so United States responds with 34%. You can see that right here, you guys. So European Union, roughly 40% with a 20% U.S. tariff. So this is not a flat 10% move. This is a calculated country-by-country tax on imports. So let's talk about how the market reacted to this. At the start of Trump's announcement, NASDAQ 100 futures were up 400 points. By the end, they were down 500 points. That's a 900-point swing in just minutes. We're now looking at the S&P 500 opening in correction territory. Investors are spooked, and tech stocks in particular are expected to get hammered. So if we look at this first screenshot that I opened the video with, look at technology over here, you guys. Minus 5.6%, minus 3.5%, minus 3.57%. I would take a look at the fundamentals of Google if you haven't. They've been getting pummeled over the last few months. This could be a good buying opportunity if you're interested in that business, even though you have to look at AI and stuff like that. But anyway, I digress. So anyway, everything's getting pummeled. Look at this huge dip. I've never seen anything this big of a swing in just minutes, you guys. This is something that is moving markets, and I've talked about this in my videos over the past few weeks. Okay, so what is the timeline of all this? So April 5th, 10% baseline tariffs on all countries are going to go live. So you can see that right here. This will take effect April 5th at 12:05 12:01 a.m. Eastern Standard Time. And then also on April 9th, the individualized reciprocal tariffs kick in. This will remain in place until Trump says the trade deficit threat is resolved. There's also some interesting exemptions. So you can see that there's no new tariffs on Canada or Mexico. Russia, they dodged the 25 to 50% tariff bullet. And then also, if you look at this screenshot right here, USMCA compliant goods, this is US-Mexico-Canada agreement goods, they will continue to see a 0% tariff, so they are exempt. Also, what I've been talking about the last few weeks, which this actually does sound like good news because I've been telling you to read the chip war, semiconductors, copper, pharmaceuticals, and lumber are also exempt. So this is a notable shift, especially since Trump previously said that pharma tariffs were coming soon. So take a look at this screenshot right here. You can see that some goods will not be subject to the reciprocal tariff. These include articles subject to blah, 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 steel, aluminum articles, and auto parts already subject to Section 232. And then here in the highlighted part, we have copper, pharmaceuticals, semiconductors, and lumber articles. All articles that may become subject to future Section 232 tariffs, bullion, and energy, and other certain minerals that are not available in the United States. So I think that's pretty interesting, and he is kind of, I don't want to say backpedaling, but he talked about lumber, he talked about all this stuff before, and now it seems like it's exempt. So what does all this mean for the broader economy? So the U.S. average tariff rate will now rise above 10%, potentially higher than World War II. So if you look at the x-axis here, this is 1900, and it goes by 10 years, so 1910, 1920, 1930, 1940, Here's World War II right here, 1946, okay? So expect 150 basis point drag on GDP growth. So again, basis points is just fancy finance terms for 1.5%, 150 basis points. A basis point is 1/100%. So Trump projects $600 billion a year in revenue from the tariffs, but analysis estimates closer to $300 billion. This is a huge bet on boosting domestic manufacturing and revenue through trade taxes. So you can see in this chart right here, U.S. posts historic $300+ billion 2-month trade deficit heading into April 2nd, Liberation Day. So even though Trump promised the largest tax cuts in American history, the market didn't really recover from that. So check out this clip right here.
And now we're going to pass the largest tax cuts in American history, and that's where we're relying on Mike and John Thune. And we will not cut Social Security, Medicare, or Medicaid benefits.
So why didn't it recover? Well, because investors hate uncertainty, and this level of trade disruption creates massive ripple effects. So to top it off, we're coming off a record-setting $300 billion trade deficit, which I just showed you, and this is just over the past 2 months. So analysts now expect the largest one-week trade deficit in U.S. history. Oh, there's the sound effects, you guys. I did it. I hit the button. Yeah. So as producers rush ahead of these tariff deadlines, that's what's happening. Bruh. I'll end it with that. So what do we do here? So here's the bottom line, in my opinion. These tariffs are massive. They're targeted and disruptive. That could be a good or a bad thing, depending on how you look at America's position geopolitically. 2, they will impact imports, producers, consumers, and investors. That's me and you watching and making this video. And then number 3, we're looking at major volatility ahead. So if you're an investor, this is the time to be sharp, disciplined, and unemotional. Stick to your strategy. Mine has been dollar cost averaging, okay? I assume that the chart will go up and to the right over a long period of time. So I invest the same amount at the same interval for many, many, many years now, since basically 2006. So you're going to manage risk and you're going to stay informed by watching this channel. So please share this video with at least 3 friends or family. And then if you want real-time reactions to this stuff on a private live stream with me once a week, check out Whiteboard Finance University. It's my private community down below. So this is Marco. As always, I hope you got value from this video. I'll see you in the next one. Gently click the subscribe button if you haven't. Gently click the bell for notifications. And gently share this video with 3 friends or family. And as always, have a prosperous day. Marco's got the best YouTube. All right, I'm not doing that again. All right, guys, peace. My Yeti is blue. My president is orange. 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 My president is blue.